Throughout this semester, we're going to be using economic data to evaluate the economy of Alberta, Canada, and the US. And so we need to know where to go to find information about how the economies are doing. So in this video, we're going to look at a couple of websites that will help us with information about the Canadian, US, and provincial economy. So let's look at a couple websites. So first, let's look at the Statistics Canada website. And we're here on the main page of the Statistics Canada website. We can see from the key indicators on the right, we can find the population of Canada. So we can see there's about 37 million people in Canada. We can also find the unemployment rate countrywide by looking here. And if we click inside that unemployment rate, we can look at it by province. And to do that, what we do is we would scroll down to the bottom of the page, and there you can see labor force characteristics by age group and sex. So that first table will tell you the unemployment rate of individuals by gender, and it also will look at students. The second one, we don't want the second one, we want to go to the third one. The third one will give us the labor force characteristics by province. So when we go in here, we can look at the unemployment rate and the labor force characteristics from Newfoundland, Prince Edward Island, all the way down, and we could find Alberta. So we dig in to the indicator to get more detail about our province. I'm going to go back here to that main page. And we're also going to be looking at things like GDP. So we want to know the size of the economy. So this one here marked real GDP by expenditure. We'll look at two approaches for measuring GDP, the income approach and the expenditure approach. And so we can find out the size of the Canadian economy in this section here. We can also look at where the growth is in the economy by industry. So a number of these charts that you see here will show you that kind of information. And we can continue down and we can look at the GDP. So when we look at GDP, we'll measure it in nominal terms, that's current dollars, and we'll measure it in real terms, that is, we take out inflation. So if we go to a table like table 3 here, we see that it says chain dollars. So this means it's in real terms, and so we've taken out inflation. We're going to look this semester at a GDP, break it down into who does the spending. So households buy things, businesses buy things, and we can look at the actual data here. So consumption spending is households, and investment spending is businesses. And there in the bold where you see gross domestic product, that is our GDP. So the size of the Canadian economy, this is in real terms, so we take out inflation, is just over $2 trillion. We can also look at it in nominal terms, meaning we haven't taken out inflation. And so if you don't take out inflation, what you see is it's about $2.25 trillion. So that first table has it in nominal terms, and the table we looked at before, table 3, had it in real terms. So we'll talk about the difference between nominal and real this semester. We'll talk about the income approach and the expenditure approach. But for now, we just want to know how big is the economy. So over $2 trillion is the size of our economy. We can get that information then from Stats Canada. So I'm just going to go back to the main page here. So that key indicators list on the right gave us population, unemployment, real GDP. Consumer price index that you see as the second one is a measure of inflation. So we're going to talk this semester about how we measure inflation and what that consumer price index is. And so that shows us there that prices have gone up 2% over the last year. Just like with the other ones, we can click inside, we can get more information as to what is happening to prices over time, and we can get details as to exactly what types of prices are going up. There is a section called More Key Indicators, so you can get sales data. What we're going to look at this semester is we're going to be looking at the balance of trade. So we're going to look at exports and imports. So we talk about exports. Exports, the goods are leaving our country and the money's coming in. Imports, we bring the goods in and the money goes out. So when we look at the trade balance that you see here, the trade balance compares those exports to imports. If we are selling more goods to other countries than we are bringing in, then the money flow is coming into our country and the trade balance is positive. So here this 136 million means that we are exporting more than we're importing, so we're making money. And that's 136 million. If it was negative, then that means that we are buying more foreign goods than we're selling to other countries, and so money is leaving the country. There are other indicators that you can find here, but those are the big ones we're going to be looking at this semester. Now, what if you wanted to know what some of those indicators were for the US? Well, if you wanted to know for the US, we go to what is called FRED. So FRED is the Federal Reserve Bank of St. Louis, has an economic database, and you can find a lot of really great information here. So even on the front page, we can see that their GDP, gross domestic product, is a 2% increase, and so the economy is growing. We can see the CPI has increased 1.8%, so inflation of 1.8% compared to the two we were looking at for Canada. We can also see their unemployment rate is currently at 3.7%, so lower than Canada. So you can get information from this key page here. You can also dive in deeper. You can click into this particular topic and it will show you what's happened. So in this case, what's happened to unemployment over time. If you don't see the key indicator you're looking for on the main page of FRED, there are a lot of them. So all you have to do is search. So for example, if we wanted to look at the population of the US, we're going to talk this semester about what it means to be working age population. So you would find that here. But right now we just want to look at the general population. So remember there were 37 million people in Canada. If we want to compare that to the US, we can see, and you can move the little cursor and look at the numbers, but there are 329 million people in the US. So Canada's about a tenth of the size of the US in population. So FRED is great for population information, labor force information, unemployment, inflation, and GDP, or the size of the economy. So all you have to do is hit search in FRED and you'll get information, and you can focus on different years as well. All right, so we've looked at Canada and we've looked at the US, but what if we want to know the unemployment rate in Alberta? So one option is in Statistics Canada. We could drill down like we did before and look at it for a particular province. But we can also get data that is Alberta specific on the Alberta Economic Dashboard. So the Alberta Economic Dashboard is just a link to Statistics Canada, pulling in just the Alberta specific information. So you can see, for example, that right now the unemployment rate is 7% in Alberta. And we can also look at there are 2.3 million jobs. There's a lot of really interesting information here, from wheat prices and gas prices, average weekly earnings. If we scroll all the way down to the bottom, we get information about the size of the Alberta economy. So GDP in Alberta is about $335 billion. Now we want to know, is that real or nominal, right? Does that include inflation or not? If you click inside, you can get some historical information. You can also see specific numbers at the bottom. Basic prices, that means real. We've taken out inflation. Market prices, that's nominal, current dollars. So in current dollars, 337 billion is the size of the Alberta economy. If we take out inflation, it's 335. We're going to talk this semester about why you take inflation out of this calculation and how to do that. So we can look at unemployment, we can look at GDP. We're going to talk this semester about productivity. So you can see there the productivity of the typical Albertan. So the typical worker in Alberta, the amount of goods, the value of the goods they make is about $77 an hour. But does the typical Albertan make $77 an hour? We'll look at that this semester. Well, what if we want to know even more specific? So we've looked at Canada, we've looked at Alberta. What if you want to know about your town? Well, we can dig even deeper because Alberta has what they call a regional dashboard. And the regional dashboard lets you look at a number of these indicators, but at your town level, municipality level. And if so, we can click here on the list and you can find your town. Maybe you live in Banff. And you can see when you click on that, you can see the population, you can see building permits, all kinds of information. So quite a lot of choices, not only economic courses. So here we have number of enrollments in high school, we have number of driver's license, so lots of interesting information about your particular town. So you can check that out and see what you can learn about where you're from. All right, so we want to be able to compare information about different economies. Well, if you want to compare information of other economies besides Canada and the US and Alberta, let's say you want to know what's happening in Germany and China, then we need to go to a website like Trading Economics that's going to show multiple countries. And if I scroll down to the bottom of that page, I can choose which country I want to look at, and I can choose what statistics I want to look at. So for example, if we want information about Canada, we can go in and you can see growth rates, balance of trade, we can see interest rates, we can see inflation rates, unemployment rates. So a lot of that data we've already been looking at, you can also find here in Trading Economics. What you'll also find when you're in this website, because it's built for comparisons across countries, oftentimes the information is in US dollars. So if you're going to use this as a source, make sure you are specifying which currency you're looking at. So here you see the balance of trade is in Canadian dollars, but some of the other stats are in US dollars. So you can look at things related to labor or prices. We can look at information related to the amount of money. We're going to talk this semester about the money supply, and we'll talk about M1, M2, and M3. So here you can see how much money is in circulation. We looked at Canada, but you can pick other countries as well. So if we go back, for example, we can choose Germany, and we can look at whether or not their economy is growing. We can look at the GDP growth rate. We can look at their balance of trade and their inflation rate. So we can look at those economic indicators for lots of different countries. If you are collecting information across countries, other places you can go are the World Factbook. The World Factbook has information, for example, on debt. So we could go in here and search the CIA World Factbook and we could look up debt. Are we working here? Debt. And sometimes you just have to type in debt and World Factbook. If their search engine's not working well, you can go outside of it and search this way. So for example, we could look at how much public debt different countries have. So here what we're looking at is this is the amount that all governments own. So we're talking about municipal, provincial, federal, all combined. So you can see the level of debt for different countries. So the highest debt in the world in terms of a percentage of the size of the economy would be Japan. Their GDP is their debt is more than 2 times their GDP. And so we can look at other countries as well. So here's Canada, and our debt is 89.7% of GDP when you add up how much the provincial governments, municipal governments, and federal governments all owe. It's just about 90% of the total value of everything we make. So you can go here and you can look at all the different levels of GDP, or sorry, of debt. And there are other indicators, so check out the CIA World Factbook, and we'll send you there for particular information later this semester. Other places you can go to get information about multiple countries is the World Bank. So if you go to data.worldbank.org, there's lots of different indicators they have featured here. You can look at population growth, you can look at greenhouse gases. So lots of different data that you can compare across countries. One of the ones that we're going to look at this semester is called the Gini coefficient. So we want to measure income inequality. We want to compare the rich and the poor. And the Gini coefficient or Gini index has that information. And so we're going to look at this semester what these numbers mean when we look at countries that have, a Gini coefficient that's 29 or 30 versus ones that are, let's see if we can find some other ones here. So you can see a lot of them in the 20s and 30s. You can see some here in the 40s and 50s. So what does that mean? That's going to tell us how much disparity there is between the wealthy and the poor. So we can get that kind of information from the World Bank. There are a couple other websites I want to show you that you might use this semester. We already looked at unemployment rates in multiple sources, right? So you can go and get the unemployment rate from Statistics Canada. You can get the provincial unemployment rate from the Alberta dashboard. But you can also go and get provincial information about unemployment and the labor market from the labor force statistics at the alberta.ca website. So the monthly labor force statistics reports, we want the public package that's listed here. And every month, a document is released. And it is a nice visual of what is happening in the labor market in Alberta. So we can look at the unemployment rate by town. We can look at it by gender. We can look at what's been happening over time. So we can see, for example, from a map, and the colors don't indicate the amount of unemployment, they just indicate zones, but you can see the different unemployment rates. So we can start to look for what areas of the province have higher or lower unemployment rates. So right now we can see that the market, oil is picking up a bit, and the unemployment rate in Fort McMurray is lower than a number of other places within the country. Medicine Hat Lethbridge is primarily manufacturing. So what's interesting is often when the Canadian dollar is lower, people buy more of the goods that we produce because it's cheaper, and then we see the economy increase in manufacturing areas and the unemployment rate go down. So the Medicine Hat Lethbridge, that unemployment rate is strongly tied to manufacturing. Fort McMurray tied to oil. Okay, Calgary also tied to oil since a lot of headquarters are there, and Red Deer, a lot of oil support services. So we can see what's happening in the economy. Look at the unemployment rate. It also tells us a lot about what's happening in terms of the market and the products that we're selling. So this labor force statistics sheet has lots of interesting information. The back page tells you how many jobs there are in different industries and does a comparison to the other provinces. So it's a good source to check to see what's happening in Alberta. If we want information on interest rates, we want to know what is happening with the Bank of Canada. So go to the Bank of Canada website and we can see the amount of inflation. So see again the same inflation rate we saw with Statistics Canada. And on the Bank of Canada website, where you want to go is Statistics Daily Digest, and that will give you the key information. So here we can see the exchange rate. So right now, if you were to take your Canadian money and transfer it into US dollars because you were going on a trip, for every $1 Canadian, you would get 75 cents US. We can also look at interest rates. This semester, we're actually going to be talking about the overnight target rate. the bank rate, and then of course prime rate. So when banks go to lend you money, the money they lend you is points plus or minus prime, prime plus or minus some points, depending on how risky you are, how good of credit do you have. But the amount of interest that you pay is typically based on the prime rate. Now, how do banks figure out the prime rate? How do they know how much interest to charge you? Well, the amount they charge you depends on the amount that the Bank of Canada charges them if they wanted to borrow money. If your bank, let's say Royal Bank, wanted to borrow money from the Bank of Canada, then that rate is called the bank rate. Now, banks, Royal Bank for example, can borrow money from other banks, like the Bank of Montreal. And if one bank wants to borrow from another, that rate is the overnight target rate, which you can see here. So the Bank of Canada sets the target for the overnight rate. If Royal Bank wants to borrow from the Bank of Montreal, they're doing so at 1.75%. Now, since the Bank of Canada would rather that banks borrow from each other, the Bank of Canada wants to be the lender of last resort. That is, I'm not going to bail you out, you go and borrow from other banks first. So the bank rate is 2%. So it's always 0.25% higher than the overnight target rate. So if the overnight target rate is 1.75, banks borrow from each other at 1.75. If a bank wants to borrow from the Bank of Canada, they do so at 0.25 more, which is 2%. Now, when you go and you borrow money, likely you're paying the prime rate, that 3.95, and you'll notice that's higher than the 1.75 or the 2%. So the bank charges you interest, compensation for them to be without their money, plus what they think is going to be happening with inflation, so that when you give the money back, does it buy what it bought before? So we're going to look at where these interest rates come from this semester, and what that overnight target rate versus the prime rate versus the bank rate, what are they and where do they come from? We'll look at that more later this semester. But you can find out what's happening with interest rates and mortgage right here under this daily digest. All right, so that leaves us with just two more websites to look at. Now, when we looked up on the CIA World Factbook, we looked at debt. Well, when we measure debt, we can look at debt in terms of gross debt or net. So are you subtracting all of the things that, when you're debt, you're looking at what you owe. Well, you have assets. If you liquidate those assets, then that pays off a portion of your debt. So when you look at debt in terms of gross or net, the key is are we considering that we could actually liquidate those assets to help pay that off? The other thing we consider when we look at debt is whose debt are we looking at? Are we looking at just the federal government's debt, or are we looking at the debt for all governments, like the public debt we looked at before, or are we looking at household debt? And one thing we'll look at this semester is that household debt in Canada is one of the highest in the world. Our households owe about 2 times our disposable income, so our income after tax, in terms of debt. So we have a lot of debt. And governments have a lot of debt. So we're going to be looking at the impact of that debt this semester. But if we want to look at debt, there are some debt clocks. This is Canada's federal debt, so just the federal government. The federal government owes about $693 billion. If we were to divide that among all Canadians, your share is about 19 grand. So this debt clock shows us how much we're accumulating in terms of federal debt. Now remember that our GDP was about $2 trillion, and that the public debt, when we looked at it from the CIA World Factbook, was about 90%. So just the federal portion is the $693 billion. and 2 trillion is 2,000 billion. So the additional debt is then at provincial and municipal levels. We can also look at US debt, and I know this one has a lot of things going on, so we can actually just kind of zoom in here. And the US national debt is 22.5 trillion. Now, let's compare this to the US GDP. Well, we can go back to Fred, and Fred told us that our economy was that the US economy was growing by 2%, but how big is GDP? So we can look at, for example, real gross domestic product. And we can see that the size of the US economy is 19 trillion when you take out inflation. And we can look at nominal gross domestic product. Let's see if we can find it here. Now, Fred is just taking information from a number of other U.S. Resources, the Census, the Bureau of Labor Statistics, the Bureau of Economic Analysis. So sometimes when you click on things, it'll just take you to the primary source. Just like the dashboards for Alberta, we're taking you to Stats Canada. That's the same thing that's happening here. So it looks like this one is showing us the growth in GDP. But we want to just know about GDP. So let's see if we can find the actual numbers here. Okay, so in current dollars, the current size of the US economy is 21.34 trillion. So in nominal terms, with inflation. Without inflation, we saw that it was 19. So 21.34 trillion is the size of the US economy. And the national debt is 22.5 trillion. So you can see that the amount that the US owes in debt is almost 100%, or is actually, sorry, more than 100%. Let's do that one more time. 22.5 debt, 23. Maybe go. 21.34 trillion. So in fact, the debt is more than the GDP, almost up to 105%. And in fact, you can see right here, it says 105.66 is the US debt to GDP ratio. So this semester, we're going to be looking at a number of these statistics, from debt to unemployment to inflation. We're going to be looking at interest rates. All these different indicators tell us different things about how the economy is doing. So we're going to be looking at these numbers. Where do they come from? How are they measured? What do they tell us? And using that to evaluate how well Alberta, the US, and the Canadian economy are doing.